Well, welcome back, ladies and gentlemen, to Soluna Computing's channel, a modular scalable data centers that convert wasted renewable energy into computing power for intensive batchable applications such as crypto mining that we're going to be discussing in this video, along with where this company is going in the latter half of 2023 against this kind of really recessionary backdrop in this macroeconomic cycle. But joining us, John, as always, the Chief Executive Officer. Welcome back.
Thank you, sir. Always welcome. Always happy to be here.
Always a pleasure to get you on because you guys are really playing in a fascinating field, and we're going to talk about that briefly. But I'd love to get your insight as somebody that is using kind of this wasted renewable energy that can't get to the grid and converting it into everything from like cloud computing to crypto mining. With crypto mining being a fairly large aspect today, right, of your business. Mm-hmm. What are your thoughts on Bitcoin here? I mean, we're holding up at pretty good highs, and it looks like there's a lot of ETF attention, and we're getting into 2024, where I guess we're going to see the halving. Do you want to give a little insight on that?
Yeah, I mean, I think there are really two backdrops in the crypto space, right? You have, I mean, the industry has matured a lot. You have really scaled players that are in the space. The successful approach is to build out infrastructure, source the right energy source, which is what we do, and then continue to scale and grow. And to do that, you have to look at two aspects, right? One is obviously your input costs and operating costs, which we've been managing down, and also driving our input costs down because we're sourcing it from these great resources. But when you look at the backdrop, the other thing you're thinking about is what the asset that you create and its value and so forth, and how that drives revenue. And what I'm finding interesting is that while crypto would normally be sort of trending down because the looming halving coming up, it's holding stable because there's a view that there could be a transformational shift in the asset class because of all of these big, very large institutions with lots of demand interested in this new asset class, looking to go from sort of a private investment vehicle to a public vehicle, which would make it more available to a broader landscape, and finally sort of open up institutional capital into the space. That could have very positive, almost, I'd use the word transformational effects on the asset class. And so it's very exciting to see everybody's following it. I check in on what's happening with BlackRock and and Grayscale's battle with the SEC, and I was in a meeting a few months ago, and it's interesting to see sort of how the SEC sees this space and, what their whole approach is. If you look at other markets, you look at the European markets, Canadian markets, there's clear regulation around the asset, how it should work, how you should perceive it, where it can be held and can't be held. And there's some, call it regulatory fortitude and investment being made to tighten up what those things look like. And that has helped the asset really expand in those places. We need that here, and I think that's why, a lot of the conversations and activities with these big players in the court system has been a bit bumpy because there isn't really clarity from a regulatory perspective on this space, and I think that would be something that would advance the asset over time. And maybe these ETF submissions is a way to force that to happen to some extent, right? The more the courts say, what exactly are you doing? What law framework are you using to make these decisions? If it's more arbitrary, and there's some, losses there, and ETFs rise, then what you're going to basically see is investment in the regulatory side. The other big backdrop is the halving. It's coming up here very, very soon, and everybody's sort of thinking about how to prepare their businesses, for that upcoming event. And that's really sort of, making sure that you've got the most efficient machines on those racks and plugged in. You've got the lowest cost power, and you've got the scale to get there. And that's what we've been focusing on over the last few quarters, And so we're pretty excited about our positioning there and, being prepared for sort of what's coming down the line.
Yeah, I definitely appreciate that. And I want to kind of iterate into your business here because you guys even go well beyond obviously just the idea of crypto. You're really kind of taking this wasted energy, which is a big thing in the obviously the infrastructure of energy. When Elon Musk is talking about like energy storage, everyone's trying to find a solution, but you guys are kind of directly tapping into this in a very efficient and fascinating manner. Do you want to give us some insight on kind of just where you guys sit with your business? Give us a little bit of idea how your plan's going and just some expectations in this last quarter.
Yeah. So last quarter, the last 2 quarters have been focused on, restructuring the business, focusing on four key areas, right? One is getting our flagship facility, Dorothy, ramped and operating, getting the hash rate up and getting it stabilized. We did that throughout the summer, in a pretty hot summer. In fact, one of the days I was there, I think it was approaching 105 degrees, walking the site. And I reminded myself that it's a dry heat, and so I shouldn't be worried as much. And just this past month, we announced that we got all of the full power infrastructure complete, all of the site buildings up and running to the full 50 megawatt capacity. And now we've essentially been ramping up the hash rate in each of those buildings and getting the power and network infrastructure up and running. And so you'll see progressively every month as we put up updates, the proprietary mining JV that we have at Navitas ramping up. We're fully ramped on Dorothy 1A, and Sophie is fully ramped as well. And so there's some great progress that we've made there. We've started working on designing our Dorothy 2 project, which is the next 50 megawatts of the facility. We've even started to looking at supply chain, sort of looking ahead at the supply chain to see how much we can get and when. The great thing is we have lots of infrastructure already on the ground that we can use to build out Dorothy 2. So that'll allow us to build the first 15 megawatts of the facility without having to source, big iron capability there. We had a number of investors visiting the site, and we've gotten a lot of interest in investing in that. And so selecting the right partner is going to be our focus over the next coming months. And that additional 50 megawatts starts to give us the scale, right, that allows the business to turn the corner and really start to, grow over time. Katie, our 166 megawatt project that we announced also last quarter, that's making really fast progress. It's moving quicker through the planning process because we've done it before. We know exactly what they're looking for. We know the right participants, and we understand how to work with the different regulatory bodies to push that through. So we've started doing actually the design work with the partner there too. All of the key contracts that we need to get into place have made a lot of progress as well. So we expect that to sort of end the year and end the next quarter with a lot of progress on that project. So that adds another 166 megawatts potential to expand. And I often like to say that, shovel-ready projects that are ready to build, attract capital. And that's when we can start building a pipeline to do that as well. There are also lots of really other good positive things that are happening. We have made a lot of progress on optimizing our costs. That was one thing that we were focused on this year as well, so that we can start to get the business to turn the corner here. And then the last thing is really just thinking about, how we begin to transition the business into other markets, right, beyond crypto, where we can leverage, our facilities in these other markets. And I want to, comment on one thing. If you look at we just talked about sort of crypto broad market, but if you look at the broader computing market, that's another interesting backdrop, right? In the course of about 24 months here, actually less than 18 months, you've seen an explosion in the demand for generative AI and large language model computing out there. And what we're finding is that demand is so high that it's outstripping the power and space and infrastructure requirements of traditional data centers. So it's sparking imagination, which we sort of perhaps foresaw happening. And we've been talking about the fact that when big tech transformations happen, it creates innovation windows. And we're starting to think about what our role could be in helping to address that pain point, right? When you have basically a pain point that is right in our wheelhouse, right? You need access to more sustainable energy in large volumes of it at reasonable prices. You are open to deploying data centers in places where they normally wouldn't be, and you need more of a data center design that's more dense. That opens up the window to a host of different opportunities. And as we look at our future projects and Dorothy 2, we're starting to think about sort of where that falls in the landscape. I can't say too much yet, but that's something that you'll see in the coming months here.
Yeah, something fascinating to look forward to. And if the people watching are interested, definitely can subscribe for those updates. But I wouldn't mind asking you too about your recent stock split, which is, I guess, stirring a little bit of controversy there. Do you want to give some insight on that?
Yeah. So stock splits, either split or reverse split, generally speaking, always causes controversy. You typically see stocks that get split, 2-to-1 splits. There's a rapid increase in the valuation of the business, even though fundamentally nothing's changed about the business. Is a bit illogical. The same is true for reverse splits. Reverse splits are perceived to have a negative signaling effect on what's going on with the business, even though nothing has changed about the business. Most of those splits are typically regulatory or compliance related, and that's true in our case. Nasdaq has asked us to get the stock back to $1. So there are compliance reasons, there are contractual reasons we need to be above $1. And you have to be in that sort of window for a certain period of time. It's approximately 30 to 40 days before the cutoff date. And so we basically worked backwards and said, we can control what's happening with our business, and we can control what's happening with the decisions we make as a management team. But when you look at our stock price, that's really driven by investors in the market, and we do our best to communicate our progress. And we have to give ourselves time for the stock to be in that realm that's in compliance, so that we can present that data that we did what we said we're going to do to Nasdaq. So that's why we split it recently. And so it's not because, as a management team, we don't believe in the business and believe that the value will be over $1. That's not true at all. In fact, I would venture to say that our team is more bullish on the business than we've been in the past when the stock was, much higher, because we do have a strong business. We've now proven out a lot of the thesis that's based on our approach as a company. And now it's just rinse and repeat. It's really about scaling it, right? By way of example, Kyle, our Dorothy data center, its whole mission in life has been to mitigate the curtailment of a wind farm. So the whole idea we pitched to the wind farm that we're co-located with is that instead of putting a battery here, you should put a data center with these characteristics. We have the technology and expertise to build out that facility. And when it's up, we're going to consume a lot of that wasted energy, and return, generate the monetization that you're looking for. And I can confidently say now that Dorothy not only can do that, it's doing it better than we had expected. And so what that's doing for us is suddenly we have a lot more power plant companies coming to talk to us about potential opportunities, and they're talking to us about different types of computing. We have computing companies coming to talk to us about how can we leverage this platform that you've built, right? And so that's creating a lot of excitement. So the reverse split is really a mechanical thing we had to do. The fundamentals of the business are much stronger than they've ever been.
Well, I think on that note, you've given a lot of clarity today, and I'll pass that question off to the viewers. We'd love to know what you think in that comment section below, and consider subscribing again, because as news and catalysts come into play, of course, we'll bring it to you here. But on that, we look forward to catching you in the next one.